Stuck traders and traders who are underwater are one of the most predictable types of traders that there can be. When a trader ends up getting stuck, and remember, I'm talking about like Goldman Sachs, JP Morgan, lots and lots of zeros in the bank account, the ones that can continue to build in. Or, on the other side of things, algorithmic trading platforms that are designed to trade really small size, but hundreds, if not thousands of times a day. Regardless of the scenario, we have a certain situation where eventually one of those sides gets stuck. They're underwater. They're hunting to get out at break even. I talk about it all the time, and it's one of my favorite things to look for. Hey there, John and Ray here, ssftg. Welcome to the video. If this is your first time landing on the channel, welcome my friend. I hope to earn your like and subscription today. In this one, we're going to be going over one of my absolute favorite things, which is looking for stuck traders. Now, what am I talking about with a stuck trader, right? Now, this is going a little bit out on an assumption, but anytime there's a situation that looks like this, where it's screaming in one direction, if I'm a buyer or I'm a bull, obviously I'm incredibly happy here, right? This is going very well and I'm totally happy. But remember, the market is made up of two different sides, and those sides tend to oppose one another. As they always say, the market is a zero-sum game. When someone's buying, somebody else is selling. So when we keep that concept in mind then, when somebody is long and doing incredibly well, there's also somebody who is short and getting absolutely buried. So we have to look at both sides of things. Now, if we're trying to locate where stuck traders are, first off, one of the best ways to figure out first, if there are stuck traders in general, is to look for a large move that would have taken traders by surprise. If we move this chart to the left, this was a very prevalent downtrend, and even this rally up could have very easily had a lot of sellers looking to do exactly what they did over here and rotate the market right back down again. So if we follow along with this concept then, obviously that did not work in their favor, but we can figure out where they were selling from. Let's draw our order flow from the bottom all the way up to, let's just do this initial top first, since this is the first time that we had any kind of downward movement. And this is a really good one here. So actually, let's go back a ways because we might have a little inside example going on here. First off, on this initial rally higher, we can see that the original POC on this whole jump to the upside happens at around 14,588. I'm not going to use exact, but I'll try to get it close. We go up to the next high, and the next high creates another POC. Now remember, if these are shorts and their average position is here, they have not done very well. In fact, for the most part, they've been underwater. They've not been having a good time at all. We can continue along with this and keep going. No new POC. Go to the next new high. No new POC. Go up to the next one. No change. We'll go up to that slightly larger one. We don't have any change in POC yet. We'll go up to the next one. And now we have our POC change. Now, the POC changing, what information does that give us? Effectively, what we're using the POC for is to discern where shorts, assuming that shorts are stuck from, and where they're building their positions up from. Just because the POC is up here now doesn't mean that they didn't start selling at 588. Remember, they're underwater on that move, and they're trying to work their way out of it. So by adding into the position, they're driving their average to the upside so they can have an easier escape route. Knowing that each one of these was originally their entry point, and it might have been their intended entry point for a reversal, but that reversal has not been happening, we can very easily figure out where their break-even points are. All we have to do is take all three of these prices, add them together, 653, 75, 14,594, 50, and 14,588, and divide by 3 because we have 3 total, and that tells us that at 14,612, and we'll just say 612 because they're short, they're stuck, we'll round down. So we'll say 14,612 at the moment is where their average is. At 12, it's effectively break even. The losing trade that they've been stuck in this whole time is now worthless, which in this case is actually kind of a good thing. That's kind of where they're hunting for at the moment. As we continue a little bit further forward, we drive up to another new high. There's another new POC change. So we have another one at 14,686. Let's bring the old math back up and add another one to that, 14,686. There we go. We'll keep going through. Okay, so now we're starting to pull back. We can take that number divided by 5. That's 11. Wait, that's not right. 5, 8. That's the number I want. Come on now. Divided by 4. 14,630, 50. 14,630, 50. 14,630, 50. Right there. Of course, then I move it. 630, 50. And then we'll make this a little bit thicker just so we can keep track of it. That is going to be the break-even point for all the bears so far up to that point. We'll go up to the next new high, and actually there is one more that was put in right there at 690. So let's go back over to our previous math over here, and we'll add 14,690 divided by 5. 14,642 quarter. Again, we'll round down. So we'll go 14,642 quarter, and that will give us an idea as to where the break even of the stuck shorts is. If we continue moving price a little bit further forward, we can see that they didn't quite make it all the way down there before ramping up to another new high. After making that next new high, we can go up there and we can see, was there any change? There has not been. So their average still remains back at 14,642 quarter, and that hasn't changed. That means that while this market's driving back lower and lower and lower, we're getting closer and closer to their break-even point until they finally are given a chance to get out of break-even. Now, at this point, the market is given one of two choices. They either look for a continuation phase with both the bulls buying the dip that they've been finally given and the sellers exiting at break-even, both coming together to create a unified bullish force, or we see the bulls try to get something going here, fail, this whole thing ends up being a false rally, and it collapses apart on itself. Regardless of the direction that this is going to go, this is, rather than anywhere else, exactly where it's going to take place. Now, there's a couple cool things that we can figure out here. We've talked about these before, but we are back to the break-even point. We are looking at the max greed target. And max greed is effectively going through this whole thing and saying, look, I know that we started selling from back here and we were wrong. And we started selling here and that was wrong. And sold here and here and here and all the way up. And every single one of them was wrong. But we finally made it back to break-even. So now that we're back to break even, can we go just a little bit further? I wonder, can we get our scalp target? That's where that greed word comes from, right? The max greed objective is going to be that scalper's target. That's that 0.5 to 1 all the way up to the highs. So if the market is going to rotate down a little bit further, aside from the small algo zones, we do have one more extended likely objective that will act as the zone of support. Now, generally speaking, when you're in an area of large bullishness, it's not just going to go like this. It's not just going to turn into a check mark more often than not. Usually, in fact, it's going to go down and have to do this before it figures out which way it wants to actually go in the end. And that's that consolidated phase before things take off. If the bulls are going to kick it off of this area, then it's not likely going to look like this. It's likely going to look like this. And if the bulls are going to fail here, it's not just going to look like this where it just goes screaming straight through. It's probably going to get stuck there as support first, then break through, because that's how the market generally operates, right? So if we continue this a little bit further forward, what we would really need to see here, now that we've actually hit the major break-even point of the bears, is to see, do they take the bait? Do they actually get out at break-even? On the first bounce, the very first time that we hit it, it immediately responded with bullishness. So my first inclination is, well, yeah, kind of, at least a little bit. Let's give it a little bit more sideways, and now we're seeing, okay, this market's doing more than just bouncing a little bit. It's starting to stop doing what it was before. The trend was originally migrating its way down, but after hitting this area, it seems to be riding the struggle bus. Now they churn a little bit through it. They can't quite get it done. We're going back up. Now we're on it again. Can't quite make it down through. Now we make a new high. And we're creating this multifaceted zone of support where you can see this battle. And this is why these areas can become so challenging, and knowing where they are can give you a distinct advantage. Because when you know that this is the bear's break-even point, selling over here becomes off limits real fast. You're selling directly into shorts who are proving that they're getting out. That's the big key here, right? Because as we continue this a little bit further forward, we can see that those shorts very obviously did exit at break even, and there were very few other opportunities along the way to actually get in for the rest of the day. I know I always say it that, break-even points and hunting for break-even points and all of that are some of my most favorite areas, but that's why. Because when you're in a point of interest where they're finally being given a chance to get out at break-even, especially if they've been underwater for a long time, chances are they're going to take it. And they end up moving relatively predictably. And you can kind of navigate around those market areas with a lot more information than other people may be approaching it with, so you don't end up getting stuck at the very least. And at the best, you might even find a nice little trading opportunity in there too. Until the next one, though, if you have any questions, comments, thoughts, topics for new videos, whatever, you can drop them in the comments below. I always love hearing from you guys. Thanks for watching, and we'll see you in the next.